Welcome back to the channel. Today's update is not just another market analysis or a quick price prediction. It's about what is happening behind the scenes right now in the crypto economy, something most people don't notice, and something that explains why Bitcoin is falling even when everyone keeps shouting that it's going to $1 million. Because what's happening today is different from anything Bitcoin has ever seen in its history. And to understand it, you need to look at the psychology of wealth, the nature of liquidity, and the kind of people who have been holding this asset since before most of the world even knew how to pronounce blockchain. Right now, something big is happening. People are taking profits, massive profits, because for the first time ever, they actually can. For years, the crypto market was too small, too fragile, too illiquid to absorb the kind of selling that early Bitcoin giants would need to do if they wanted to exit their positions. Some of them have been holding thousands, even tens of thousands of Bitcoin since the days when mining on a laptop was enough to change your life forever. But back then, selling their stack wasn't just difficult. It was almost impossible. Imagine trying to sell even a few $100 million worth of Bitcoin in 2016, 2017, or even 2019. And the moment liquidity arrived, the moment trillions of dollars flowed into the Bitcoin ecosystem through institutions, ETFs, and global markets, something completely predictable started to happen. The early giants, the silent whales, the people who have been walking among us with fortunes unimaginable to the average person, they finally started taking profits. Not because they don't believe in Bitcoin, not because they think Bitcoin won't go higher, but because they've reached a level of wealth where waiting for Bitcoin to hit $1 million doesn't make their life any different. If you're sitting on billions, why would you risk waiting for trillions? That is exactly what is happening right now. And here's the perfect example. Recently, a Bitcoin wallet that has been dormant for years suddenly started moving coins, hundreds of millions of dollars worth of them. Not one transaction, not two, a series of massive cash outs. These aren't newbies panics selling. These are strategic exits. And then comes the story that shocked even Wall Street. Earlier this year, Galaxy Digital processed one of the largest Bitcoin sales ever. Almost $9 billion coming from just one person. One wallet, one early believer. And here's the twist that most people miss. That person didn't care if Bitcoin was going to $1 million. Why? Because when you're sitting on $9 billion, you don't need $1 million Bitcoin to validate your investment. You're done. You've won the game. You don't need to wait for the final level. Your life is already beyond the scoreboard. But let's go deeper into why this matters for today. People often ask, if Bitcoin is going to $1 million, why would anyone sell now? The answer is simple. Because wealth doesn't work the way most people think it does. The average investor thinks, if I hold longer, I'll get even richer. The ultra wealthy think, how much liquidity is available, and how do I exit without destroying my own fortune? That's the key difference. Early whales knew that if they sold too early, too aggressively, or at the wrong time, they would collapse the very market they were trying to profit from. It's like trying to sell your house while setting the entire neighborhood on fire. You'd be burning your own investment. But today, for the first time ever, things are different. The Bitcoin market is bigger, deeper, and more liquid than at any point in its history. There are institutional buyers. There are spot ETF. There are hedge funds with mandates to buy dips. There are pension funds taking small but steady positions. There are billions of dollars waiting every single day to absorb supply. And the whales can finally tap into that. This is why the market is behaving the way it is. This is why you see heavy selling at the top. Because the early giants, the holders from the beginning, the unknown billionaires who never appear in the news, are finally getting their exit window, and they're using it. They're cashing out safely, slowly, and without breaking the market. That's the difference between 2024 and every year before it. In the past, a whale selling 10,000 Bitcoin could cause a panic. Today, the system can absorb it, at least to an extent. But even then, the selling pressure is enough to cool down the hype, slow down the momentum, and create corrections. And here's the part most people don't want to hear. When the early whales sell, the price doesn't crash instantly. It bleeds slowly. It grinds down. It looks like normal volatility. It masks itself as corrections. But behind the scenes, wealth is transferring from old hands to new hands. This is the real cycle that drives the market. It's not technical analysis. It's not news headlines. It's not predictions on Twitter. It's liquidity rotation from the earliest investors to the newest ones. Now, does this mean Bitcoin is done? Absolutely not. In fact, massive selling followed by stability is one of the strongest signs of market maturity. When a trillion-dollar asset can handle billions in sell pressure without collapsing, it means the foundation is stronger than ever. But for the average investor, the lesson is this: don't assume that whales think the way you do. Don't assume that they're in the market for the same reasons as you. Don't assume that price targets matter to someone whose net worth already looks like a cheat code. Bitcoin's market cycles are driven by psychology, fear and greed, patience and panic, accumulation and distribution. And right now, we are in one of the biggest distribution phases in the history of the asset. If you truly want to understand Bitcoin, don't just watch the price. Watch the wallets. Watch the liquidity. Watch the behavior of those who have more influence on the chart than 10 million small investors combined. These people don't trade based on emotions. They trade based on life decisions. Some of them have been holding since their 20s and are now in their late 30s or early 40s. They're not trying to maximize their portfolio. They're trying to secure their future, their family's future, their legacy. And that brings us to the real point. The reason markets move is not because of charts, but because of people. People who don't need Bitcoin to hit 1 million because they're already at a point where even a 10% extraction of their portfolio changes nothing in their daily life but changes everything in their long-term strategy. This is the era of liquidity. This is the era where Bitcoin becomes not just a speculative asset, but a mature global commodity that can handle the weight of institutional money. And in this era, the earliest winners finally get their chance to walk away with life, changing generation, defining wealth. So yes, Bitcoin might go to 1 million someday, but that doesn't mean everyone is going to wait for that moment. Wealth is not about waiting for perfection. It's about recognizing when enough is enough, when the game is already won. And right now, some of the biggest winners in financial history are quietly stepping out. If you're watching this, it means you're paying attention. Stay informed, stay smart, stay early, and remember to subscribe for more breakdowns like this, because understanding why the market moves is more important than guessing where it's going next.